Patience is something that you need in crypto, and patience, unfortunately, is something that not many people that are new to crypto actually have. People don't understand that most of the time the market is ranging, and patience is something that we need with Cardano, guys. 52 days in this range. We've been bouncing off 67 as support, we've been rejecting off 82 as resistance, and we're coiling up, guys. When you see this type of pattern, it is coiling up for a bigger move. So, is the bigger move going to be on ADA to the upside, or is the bigger move going to be to the downside? Because we've got one forward leading indicator that we need to look, analyze, and assess to help us identify whether we're going to get max pain on Cardano or whether we're going to the moon from here. Firstly, welcome back. I'm Keith. This is Crypto Bullseye, guys. And what do you think about this Cardano range at the moment? It is boring. We've been in this range for 52 days, and I've done quite a few videos during these 52 days. And we are bouncing off the 67-cent level, 65 to 67 cents. And then the rejection point, of course, is the 82-cent level. We were talking about this rejection point for quite a long time when we were in this range here, saying that we were going to get rejected from this point. That was previous support here. That was going to act as resistance going forward. So we were in that range. We did get a big breakout. That was more of a fake out, in and back out. So we're back in the range now. You need to respect the range. So 82 cents was the major resistance before, guys. We fell down a little bit now, and this 77-cent level is going to be a short-term resistance. Don't get me wrong, we need to beat the 82 cents before we can start turning bullish again. But what I want to do is just zoom out and look at the bigger picture. And then we're going to add different metrics onto this to find out exactly whether we think max pain is going to be to the upside or whether max pain is going to be to the downside. So we're talking about the range first, guys. This is what we need to identify in the short term. Are we going to break to the upside? Are we going to break to the downside? We need to look at different metrics before we can understand that. What is the most likely scenario? So what we're going to do is we're going to zoom out and we're going to have a look at what the indicators tell us. So we zoomed out, and the first thing that I want to show you is the RSI. This is the weekly chart now. What we need to do in the short term, guys, is hold this 50% level, this 50 level on the RSI, the midway point. When you're above the 50 level, this is bullish. When you're below the 50 level, that is bearish. We can look at the RSI and we can check that against price action. And you can see, guys, when we're above, we're trading above 50. This was previous resistance. This was previous resistance. This is now flipped support. We're holding the 50 level. That is bullish. When you look underneath the 50 on the RSI, you can see below resistance, that is bearish until you get the breakout above the 50. So this RSI can be a forward leading indicator, and it's something that we need to look at and observe. It's a higher time frame, guys. These things take a long time to play out. The next thing is this. What happens when we've got an oversold stochastic on the weekly RSI? You get a big buy up. Every time you get a big buy up, you get a big buy up. It's met by bullish action. So that's what we're waiting for now, guys. And that could take a couple of weeks to play out. However, there's a more probability, or there's a higher probability, that we're going to get a move to the upside on the macro as far as the bigger moves concerned. We're going to talk about the max pain levels very shortly, and we're going to talk about build up of support and resistance and what happens when you don't have that build up, and why you get that surge in price action, whether it's to the upside, whether it's to the downside. So we're in the range. When you look out, you zoom out, you can see that we are oversold. Everything is oversold. So that's a higher probability in the next few weeks that we're going to be coiling up for a move to the upside. Does it mean it can't go down? Doesn't mean we can't go down, guys. It's a probabilities game, and that's what we're doing here. So the next thing we're going to look at is, where is max pain to the upside? Where is max pain to the downside? See, we've got a bit of a wedge pattern here. We've got a bit of a triangle. So if we drop this level here, guys, if we drop this level and we take out this low here sitting at 62 cents, then because there wasn't much build up of price action here, expect a big surge to the downside. That would be max pain to the downside, and that could go all the way to 30 cents. Is it going to happen? We're still holding support. We need to respect the trend at the moment. So max pain to the upside, we've talked about this time and time again. We'll go back onto the other chart. Max pain to the upside. It's this 38.2% retracement of the previous bull market high. And this is something that we measured all the way down here on this channel, guys, going all the way back to January 2023. We built in this 38.2%. We expected it to be a huge resistance. It was a huge resistance point. And once we break through there, exactly what we've talked about in the last one, max pain to the upside, bam, all the way up to $2. Why is that? Because there's a lack of buildup of price action here, which builds in support and builds in resistance. When you've got big price action doing this accumulative phase, when we're in a process like we're in now, guys, this accumulative phase, once you break to the upside, that is going to act as strong support going forward. What was previous resistance for a long period of time during an accumulative phase, it coils up and it coils up and it coils up. What happens, guys, is the bears that are trying to push price action down, where do they have their stop losses? Above here. What happens when all the bears' stop losses get triggered? Guess what? Big surge to the upside. And guess what happens to the bears? They're all stopped out. They change their thesis and the buy orders all start here. Buy orders all start here. Then you get a move to the upside. And that's the psychology behind it, guys. So forward leading indicator is, of course, the Bitcoin dominance. In fact, there's two of them. This thing has been in the range itself, guys. This thing has been coiling up itself for 57 days, 55 days. So it needs to make a move. And we're hoping it's going to make a move to the downside. This is going to act as resistance, and this has acted as resistance for those 55 days. The top of there is 62.37%, and we actually reached 64.35%. So what we want on the Bitcoin dominance is a big drop to the downside. For this not to act as support, for us to fall through here, and then that would be alt season, backed up by, guys, a weak dollar. The dollar's holding this trend at the moment. This is its momentum line. Once we lose this key level, this is a 61.8% retracement of its previous big move here. Once we lose this level here and we drop the momentum line, bam, people are selling their USDT. What are they buying? Altcoins. So you get the rotation of capital from Bitcoin, you get the rotation of capital from stable coins. Guess what? It goes into altcoins. Then you get the big surge to the upside, confirmation, bam, bam, bam. So those are the forward leading indicators that I'm looking for in Cardano, guys. One thing we could do actually, have a quick update on this Polygon trade that I looked at yesterday. I said this was going to be a key rejection point. I said that we wanted a pullback. We're actually coming back into the pullback zone now. This is going to be my buy zone for Polygon, and the buy zone is sitting at 21 cents to 22 cents. Anything there is good for me, guys. Where's the rejection point? Underneath this previous low, sat at 20 cents. So gives you a bit of wiggle room there as far as risk management is concerned, because the risk to reward's low once it comes back down to this support, guys. Remember what I said yesterday in the video? Said if you took a trade from where price action is now, where we were getting rejected, and you put that below the previous low, what does it do to your risk? And what does it do to your reward? Wait for it to pull back, then look at that, 4.41. So use it to your advantage, guys. And unfortunately, it's a waiting game for a lot of the time, but patience helps you pull back into support levels. When you pull back into support levels, that helps your risk to reward. And then you can use additional tactics such as trailing stop losses on the way up to ensure that you minimize your risk, you mitigate your risk, and then you can push forward with the reward. Right, okay, let me know in the comments if you did find it useful, and I'll see you in the next one.